Welcome to Markets Now. I'm Michelle Roque with Naomi Blohm of Total Farm Marketing. Grains ending mixed on Thursday. We were higher in cattle and milk futures. And Naomi, let's start off talking a little bit about the greens because we've had a good rally off the lows. And now we're up into some chart resistance?
We are. So looking at the July contract, just trying to really stay above the 460 level and stay into the uptrend. We had broken the uptrend just a couple of weeks ago, and things were looking a little bit dismal. But traders waking up to the fact that ending stocks are tight. We're back in the uptrend. Now that was established back in September of a year ago. And people starting to keep an eye on the weather. And the December contract is proof of that. The December contract now easily above 450, pushing higher. And traders are wanting to watch the weather because demand for corn has been so strong. We have strong export demand. Ethanol demand is not too shabby at all. It is really hanging in there quite nicely. And so traders are very much in tune that if yield comes in less than 181, it can really tighten up that ending stocks balance sheet pretty quickly. So we're starting to maybe see the marketplace put some weather premium back into it. Also, seasonally, remember the high for corn prices for that summer high oftentimes will occur between Mother's Day and Father's Day. And we know that we started Mother's Day with corn prices on the lower end of trading ranges. And now that we've got some get up and go here, I feel like we're going to see the market high price come, I'm guessing, first, second week of June. It could be in conjunction with the June WASDE report, but also traders focusing on weather. And actually, when we saw the NOAA weather forecast come out and say hot and dry temperatures for July and August, that's when the corn market started to pick up with prices. And we saw fund traders buy back some of those short positions that they had established.
Yeah. Did wheat also run up into chart resistance? And are we done putting in weather premium in that market as well?
Yeah, wheat has had about a 50-cent rally. So it is at a short-term resistance level right now, but we're keeping an eye on global weather. So things in the Black Sea region continue to be on the drier side. The wheat conditions in China also on the drier side. And we saw that when China bought some wheat a couple weeks ago from Australia and Canada. And while we know the U.S. has the potential for this fantastic crop, we are still hearing about the concerns in the Kansas wheat crop with the disease there. And now the Illinois crop tour is going on, and they're talking about potential for great yields, but they said it's been so wet that they're worried about disease starting to become an issue in that crop there. So traders are really watching everything that's happening in the world, monitoring global weather conditions. And the wheat in the United States, we had a fantastic export sale this morning, and that really was supportive to the marketplace. Otherwise, we might have seen wheat have a little bit of profit taking on Thursday, but because those export sales were so solid, it actually gave the market some support and allowed for wheat prices to only close a touch lower instead of maybe seeing more profit taking. So it's a good sign that demand for American wheat is strong.
Yeah. Soybean market, we continue to see support in the 100 and 200-day moving average area hold here. What's going to drive that market or continue to drive that market moving forward here, do you think?
Well, I think it is going to be weather dependent and also keeping an eye on export demand and the biofuels demand. So when you look at the weather, so we know that the U.S. soybean crop is about 2/3 planted. But we want to keep an eye on North Dakota, only half planted. South Dakota, still about 1/3 of it to go to be planted. And those, of course, are the big grains that get exported out the P&W towards China. So speaking of China, what we're watching for there is any sign of trade deal. And it's probably going to be a slow process. I'm personally thinking that China is keeping an eye on their weather this summer to know how much grain they need to potentially import. I think they're also definitely trying to do negotiations on the trade deal. So soybeans, I think what they're trading higher because they're saying, well, at least nothing bad is happening on the trade deal front. So they're just cautiously inching higher. And then, of course, we have to keep an eye on biofuels mandates because that could be just new demand that comes into the marketplace, or it could be something that drags prices a little bit lower. So there's three things that need to be monitored in soybeans. But at the bottom line, ending stocks for old crop are tight. And because we have those lower planted acres for new crop, the new crop ending stocks could be tight too if there's a weather issue. So, soybeans, there's also an inverted head and shoulders formation. So like an upside down image that shows that we could see potentially $11 beans for the November futures contract as a potential upside target. And soybeans also, similar to corn, have a tendency to find a summer high between Mother's Day, Father's Day. Sometimes they can get that extra high in August, though, based on weather conditions during pod filling.
Yeah. So how do producers right now kind of use those seasonals that you just talked about to their favor in terms of marketing?
Well, what you want to be doing is taking in mind where you should be potentially forward contracting with cash sales. So, for example, December corn, if the new crop corn can work higher, the 470 to 475 futures area is a target. That's also the 2-year downtrend line. On the November beans, $11 at this time seems like a very realistic target. And that might be a place to start with some forward contracting. That could happen over the next 2 to 3 weeks quite easily. So call your elevator, get those orders in place, and then maybe start thinking about if we can get up to those high values. Once you forward contracted what you're comfortable with, think about how you're going to be maybe protecting with unpriced bushels, potentially with buying puts, just to protect that other safety floor and have that valve there to just give you that downside protection in case we end up with a beautiful summer and prices sink lower. So it's that time of year. We go through this every year. This is not anything new. Just have to have confidence to pull the trigger, be disciplined, and be really watching the markets on a daily basis.
Yeah, for sure. Is weather in your mind the only thing that could give us that summertime rally, or if we start getting some trade deals signed, or what's it going to take, do you think?
Well, I would say weather is primarily the main focus, but if we got some good news on the trade deal front, that would be fantastic. Definitely would be helpful for the marketplace. And of course, the biofuels, that'll be something to monitor as well. My personal bias is that they, meaning people in government, might be wanting to see how the U.S. summer weather fares before they start increasing demand too much. But we'll see what actually transpires there. So weather definitely matters.
And the cattle market had a really nice rally here today, Naomi, and we've had some better cash trade. I think everybody wants to know, can we go up and negate the key reversals that we've had here, or at least retest the highs?
Well, the answer to that lies in Friday's cattle on feed report. So we are seeing definitely some nice demand news. The consumers seem to be hanging in there, especially as we head into grilling season for summer. But the question will be, what is the cattle on feed report going to say? Is it going to justify enough friendly news to justify market prices going higher to take out that bearish key reversal? Because my fear might be, if the report is neutral or maybe a little bit negative, that would be a cue for the funds to exit all of those long positions quickly before the end of the month finishes up so they can square their positions on the books. So really be in tune not only to the cash markets, but Friday's cattle on feed report.
Yeah. Well, that's a key point that you make, because the funds have made a lot of money on this rally up, haven't they?
Sure have, yes.
Absolutely. Okay, so the milk market has had a big run the last couple of days. Talk about what's pushing that. What's driving it right now?
Yeah, so earlier this week, we had some strong news about cash cheese prices. So cheese demand is strong, cash cheese is strong, and that pushed the milk market up about 60 cents on Wednesday with some follow-through buying Thursday. And the interesting thing, though, is that the milk production report came out Wednesday afternoon. Milk production for April up over 1%, about 1.5%. And actually, even the March number was revised a little bit higher because there are actually more cattle being milked. So that's the reason for the stronger production numbers. But what we're watching is how domestic demand for dairy products is strong. We're watching how global demand for U.S. products is still strong between cheese and butter. So that's been pushing the market higher. But now we're at this critical juncture where we have summer milk contracts at the $20 area. So this is going to be a big resistance area, and we'll need some immediate fresh news for prices to go higher than that. What would be that fresh news? There is a cold storage report on Friday afternoon. So we're going to want to see where inventories are of cheese and butter in our domestic supply. And traders will probably use that information then next week to either justify why milk prices would go above $20 or why we could see profit taking and prices work lower next week.
Thanks so much for joining us, Naomi Blohm with Total Farm Marketing. That's Markets Now.